Welcome. We are going to take a look at BTC and some stocks, gold, oil, and some indices. I have done some research, so I'm going to show you a couple of new indicators and one that nobody else that I know of uses, but I find relevant. So let's go to screen share and take a look at the charts. Here we have BTC 10 minutes. I'm not going to talk about the 10-minute chart. Let's move on. 20-minute chart, the same. I'm not going to talk about it. And now we have the first chart that we take a look at, the 30-minute chart. And so as you can see, we are on a 1. So according to the 4-minute chart, you should be in cash. But the price is under most of the moving averages, which is bearish. The 7 moving average is a very small time frame, and for most stuff is not too important. The yellow one, the 7, but all the other one, even on the 30-minute chart, are above the price, which is bearish. One-hour chart, you are on a 3, you had a 2 below a 1, so you could be in a short position. The same, moving averages are important, and you are below all the moving averages, except the 7, which is bearish again. So moving averages are bearish, and TD sequential is bearish. Stop and reverse did not get hit for now, but could get hit soon. You only have a support at the 200. I think it's the EMA. No, it's the MMA. You only have support at the 200 MMA, but I would not count on it holding the price up. If we take a look at candlesticks, you can see that you had a bearish harami, and we went down. Now we are on a bullish engulfing, but as I showed you before, a lot of stuff is bearish, so I would not count too much on the bullish engulfing, just as this one. You had a bearish engulfing just after, so I would not count on this bullish engulfing to get the price up. 2 hours, you are on a 2. I think the 2 traded lower than the 1. Let's see. If it did, you should be short. No, it did not. For now, it did not trade wrong, so you should be in cash. You are below, you are here on the 2. It looks a little better. You have a little support since some moving averages are below the price. But you are still below the, is it the 30? I think it's the 30. Yes, you're still below the 30, so that's bearish. So even here, you did not manage to get over all the moving averages. So, but it's a too short time frame to really look at the moving averages. Anyways, you have a little support under, but don't count on it too much. Stop inverse did get hit, and you're on a 2. If you go a little longer, you should be in a short position according to sequential. Bollinger Band. So Bollinger Band is closing, and we have difficulties getting above, so we stay below the middle Bollinger Band. The middle Bollinger Band is pointing down. I give it a negative. MACD, the red is higher than the 2 and you're below 0, it's negative. Stochastic, so stochastic is negative 2. on the 2 hour. 3 hour, you're on a 2, but the 2 did not trade higher than the 1, so you should be in cash. Stop inverse did get hit, you have a little support, a couple of moving average under the price. But you can go through them quite fast, so be careful. For you're on a 1, you had a lot of 1s, you had a 2 here, but it did not go lower than long, so you should be in cash for a long time, according to the 4-hour chart. You have a couple of moving average as support, but stop inverse did get hit. 5-hour chart, you're on a 5, you had a 2 below a 1, so you should be short. Stop inverse did get hit, you have a support, but the support can break easily. The moving averages are support. You're still below the 200 MMA, so that's bearish. And it's a short time frame. So even on the 5-hour, right now you are not higher than the 200 MMA. To me, that's bearish. Here I did put some FIB on, and as you see, you have support at the 0.618. At the 618 Fibonacci. Also, you have a trading range, which is pointing down. Let's put that to the last value. I can extend it in time, but it will be trading down, as you can see. The trading range is trading down. You have a little support with those moving averages, but be very careful. You can go through them extremely fast in a click of an eye. And you are below the 200 MMA, and you could not establish yourself higher than 200 MMA on the 6-hour. So that's extremely bearish to me. The 200 MMA is at the 0.5 Fibonacci, and we could not go higher. That's bearish to me. Stop inverse are going up very fast and will be hit soon. If you look at the moving averages, as I told you, price is below a couple of moving averages, and they are all flat or pointing down. The most important on a small time frame is the 200, and the 200 is pointing down, which is bearish. You had a couple of golden crosses here, 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 but now they are all flat, and if price goes down, you will get death crosses. Bollinger Band, to me, this is bearish. I mean, they are closing and pointing down. We cannot go higher than the middle Bollinger Band. To me, that's bearish. MACD is bearish, as you can see. On the 6-hour. Long via short, so you have a lot of longs and very little shorts. So that opens the door to downside action, because most people should be wrong. Trading is not something where most people make money. Most people lose money. So if there are a lot of people going long, the probability is high that that they lose money and that we go lower. Okay, that's the first positive chart that I'm seeing. It's the stochastic on the 6-hour, and it's pointing up. So that's a little hope. If we look at the candlesticks, you had a bearish harami as the last candle. This one is open, so it doesn't count. You have to wait for it to close in order to judge this, to make its adjustment. And as you can see, a lot of the last candlesticks on the 6 hour were all bearish. Here you had a bearish harami, then an inverted hammer. Those two are red. It's bearish. Here have you again a bearish harami. So to me, the last candles are sticks are bearish on the 6 hour time frame. Eight hour, you're on a 4, and you had a 2 trading lower than a 1, so that should be a short position. Stop inverse did get hit. You are below the 200 and could not even touch it. It's the 128, I think. Yes, I think it's that. Yes, that's the 128 EMA is resistance that we cannot go higher. You have a little support, but you can go, the moving average below the price, but you can go through them extremely fast. 10 hours, you're on a 5, on a short position. Stop inverse did get hit. The same thing with the moving average as the 8 hour time frame. 12 hour chart. So that's a little hope. And that's probably because why price is not topping that much. So you're on a 9 here. It's a 9 buy. Expect the price, I would say, normally you can expect 1 to 4 candle up then lower. I would say that we won't cross that moving average. Which one is this? It's the 100 MMA. I would not expect us to cross the 100 MMA on the 12 hour chart. So I expect us to go up to the 100. 1, 2. So I'm not sure that we get 4 candles of up to 100, but up to 4. So 1, 2, 3, 4. Best case scenario. Well, it's not the best case scenario, but that's what I think, and then lower. So expect that to happen. Or the 9 could just keep the price up and hold us a little longer before we drop. Stop and reverse are below the price, but a lot of moving averages are higher and resistance that will be extremely hard to cross on 12 hour chart time frame. 12 hour time frame candlestick bearish. Since the last one you got was a bearish engulfing and then 2 red candlesticks. Uh, 15 hour, you're also on a 9. So the same thing, expect the 9 to hold the price for 1 to 4 candles and then probably lower. 1 day time frame, you're on a 4 and you had a 2 trading lower than a 1. So you should be in a short position. The 1 day is high enough time frame so that the moving averages are really important. And as you can see, they are all pointing down. They're all one below the other one and pointing down. We could not go higher than the 30 or the 50. We tried staying higher than the 30 but could not, and now are below the 30 again. So there's only the 7 that is below the price, but the 7 is very short term, so it does not really count. All the main moving averages are higher than the price. That's extremely bearish. And TD sequential is bearish too. Here you see it again. So that's very bearish to me. Bollinger Band, we hit the upper Bollinger Band, we did get rejected, and now are going down to the middle Bollinger Band. I don't expect the middle Bollinger Band to hold the price, and the target should be the lower Bollinger Band at 3,300. Bearish. MACD is still bearish, but closing, so it could, I mean, it's still positive, but it's closing, so it could be bearish very soon. For now MACD is positive. CMF on the 1 day is positive too for now, but it is dropping and it could be bearish very soon. So the positive stuff that I told you until now, I think it will only hold the price at the same level. I don't expect us to go much higher than we are right now. Volume chart, well, there's quite some buying where we are right now. So there's some buying volume here. But the volume sticks are quite low. I would give it a neutral. Stochastic is bearish on the 1 day. Candlesticks. So you had a bearish engulfing, then a doji. Doji is hesitation in the market, and now nothing remarkable. The last bullish engulfing was here, and that was all you did get. Then you had a hammer that was bullish too, an up day still, and then you went down on the 1 day time frame. NVT. So NVT is an important indicator because it tells you when to short, when to go, when the up move has stopped, and when to go long. So it told you to short up here. The red tail tells you to short, and the green tells you to go long. If you did that, you did very well. Here it told you to short again when we were at 6,000, and now you should still be in a short position. If we look at last bear market, so it told you to short at the top, then it told you to short again here. Here it gave you the bottom of the bear market actually, and then it told you to go long, so you could go long here, and the price, and it told you to go long here again. So NVT is very good. And even here, the last time the price dropped, it told you to short at the top, and it told you to go long at the low. So NVT is a great indicator to tell you if you are in a bear market or in well, if you should be short or long. And right now you should be short. It tells you if there's a bottom signature. And here was one, and here that could have been one, but it was not one inside. But still, you could have made some money if you bought at that level. Anyways, you have to wait for the next green indication to go long. Right now, according to NVT, you should be short. Here we have, we are on a 4. You never had an indication to go long on the 2-day time frame. I only put some percentage in case we go up until here, which I don't expect, but if we do, that would be 50% gain. So if you are in a 2x position, and you make more than a 50% gain, you get liquidated. You lose all your money. 2x short position. And if we go up here, you lose all your money. That's why shorting is a risky business. If you are short 1x, it's like being in cash, but if you're short 2x and you go up 50%, you lose all your money. Here you have the historical volatility rank, and as you can see, it is going down. When it reaches that level, the right price line, when it reaches that level, those lows, you can expect a breakout, a big move. So we are very close right now to that level. Let's make it a little more clear so you can see it better. As you can see, we are very close to that level, and it's pointing down since a long time. Last time we were that low, it was at 6K and then we dropped sharply. So now we are getting as low again, and price should move once you reach that level. Three days, you had a 9, then 1 to 4 candle direction. So now you're on a candle number 4. The correction should be over and we can go lower. You never had an indication to go long. Stop and reverse, it get hit. You are below all the moving averages. All the moving averages are pointing down. Here you had a death cross. So that's bearish to me. For day, stop and reverse, it get hit, bearish. You are on a 3, but never get an indication to go long, so you should be in cash. Moving averages are all pointing down. It's bearish to me. A couple of death crosses. You had a couple of death crosses. Five days, you're on a 3. You never had an indication to go long. Stop inverse are below the price for now. Moving averages are pointing down, bearish. Price is below, all the moving averages bearish. Six-day chart. You're on a 7. You had an indication to go short, I think, when the 2 traded lower than the 1. So you should be in a short position. Price is below all the moving averages. It is bearish to me. A couple of death crosses. You had a couple of death crosses. One week you're on a 2, but no indication. You had no indication to go long. You are below the stop and reverse and below all the moving averages. This is bearish. So as you can see, as the higher we go with the time frame, the more bearish it gets. And even the low time frame don't look that good. Here we take a look again at the moving averages and see that the price is below nearly all of them. So that's bearish. The main moving average is just bearish. Stop and reverse are higher than the price, that's bearish too. If we look at the Bollinger Band on the 1 week, I would give this a neutral because the price doesn't seem to be able to go to the middle Bollinger Band. So, and for now, it does not follow the lower Bollinger Band, so I give it a neutral. The same with MACD. It's quite flat and crossing right now, but below 0. I would give it a neutral to negative on the 1 week. Here you have the ASE. I had hoped that we could touch the breakdown point and then go lower again, oversold, but we could not. So I would give it a negative because I'm expecting us to go oversold again. Stochastic is, I give it a neutral. It's flat for now, but quite low, so I give it a neutral. It doesn't look, looks like it's going up on the 1 week. Last candle on the 1 week was a bullish engulfing, but this current candle does not look that good. But there was no follow through. 2 weeks, you are on a 1, you should be in cash. Stop and reverse are higher than the price. We will take a look at them next. You are below all the moving average, but even the 7. It's extremely bearish. Here, as you can see, the stop universe told you to go short on that candle and never told you to go long again. You should still be in a short position. And that means the bear market is still moving. Last bear market, stop universe did get hit quite at the lows. So it was a good entry point when they did get hit. And right now, you're still waiting for them to get hit. So you still should be short. Three-week, you're on a 5, you're at a 2, trading lower than a 1, you should be short. That moving average, I think it's the 100 MMA, yes. The 100 MMA is holding the price up, but it hold the price already twice. We did touch it twice. I'm expecting it to break, and then the target is at 1,900, the next moving average, 128. You're in a 5 and you should be short. A stop universe higher, that's negative. Here's my new indicator. It's called HACO, and it tells you quite nicely on the 3-week chart if you are bullish or bearish. And as you can see, we are bearish since here. And we had only one bullish candle and all the other ones were bearish. Last time, on the last bear market, it told you quite nicely, except for these 3, where the price was holding a little up, to be bearish. So it told you here again to be bearish, and it only told you here to buy. Here it told you be careful, to be bearish again. Here it told you to buy. So that was a quite good entry point in the last bear market. And then it told you all the bull market very nicely. So right now you're still bearish. You're still in the bear market, according to HACO. That's the indicator that nobody looks at, but that I find quite useful on the 3-week chart. 1 month, you're on a 7, so expect a 9. You are below all those moving averages that you see. Stop inverse are higher than the price. Here is my price prediction for the bear market. So I expect us to drop. I gave it a little uptrend here, but I don't expect us to go higher than the breakdown of 3K. Then I expect us to go to the next support level, which is at around 1K. I expect us to drop a little below 1K, then go up to 3K again, hit resistance, go up to 6K, hit resistance, go up to 20K, hit resistance, and then go up to 50K, test 20K again, 50K will be then resistance, and then to 100K. And I hope that we will break 100K in the end. But that's only for 2030, 100K. So that's not for tomorrow. And I expect us to go higher than 20K, 23. Beginning 20, no, not beginning 23, even later. August of 23. Then I expect us to go to new all-time highs. But for now, for the short term, I'm expecting us to go lower and much lower. Here, if we go below 1K, the shitcoins could all die and all the scammy stuff in crypto could disappear. So everybody should run out of money once you go below 1K, and everybody should lose confidence in all the scam coins they love right now and still hold on for their life. even if they already lost 90%. So I think when you go that low, they lose all hope, and then can go up again. I will adjust this outlook as soon as we get new price. So if I see that something completely different happens, I will adjust it and make changes. But for now, that's my outlook. Here you had bearish engulfing, and after that you did get nothing. Right now you're on a bullish harami, but the month is not over, so this does not count for now. On the 1 month, if you look at BLX, you have support at 1.6K, which is the 100 MMA. 2 month, you're on a 5, so that's bearish. You're below both of the moving averages, that's bearish. 2 month BLX, you have support at the 50, which is at 1.8K, around 1.8K. Three month, you are between both of those moving averages, the 30 and the 7. You're on a 2, but the 2 did not trade lower than the 1 for now. BLX 2 month, the same thing. You can see that you are between both those moving averages for now, but you should break the 30 moving average soon. And then you should be in a short position according to the 3 month chart. As you can see, you did get a red 4, so you should expect at least 6 more months of downtrend. 4 months, you're on a 2. Last time you did get a 3, so expect this one to close, and the next one. I don't know if the 3 will be positive as in the last bear market. I don't expect it. I expect this bear market to be worse. So I'm not sure that we will get a number 3 that will be a green candle. I'm not sure about that on the 4 month. Right now you're still higher than the moving average, the 7, but we did get below the 7 during the last bear market. So I'm expecting us to go below this time too. BLX does not give you much more information on the 4 month. Dow Jones, you're on a 5, so that's bullish. Expect a 9, you're higher than all the moving averages, that's bullish. On the 1 week. So all the charts that I'm going to show you now are 1 week charts. So here you're on an 8, expect a 9, and then a 1 to 4 candle correction. You're higher than all the moving average, that's bullish. Stop inverse get hit below the price, that's bullish. So Nasdaq is looking good, but you're getting a 9, so I expect a correction. S&P, you're on a 5, so there can be more uptrend. You're higher than all the moving average, that's bullish. The moving average here, the short one is crossing the longer ones, which is bullish too. So S&P looks good. Amazon, you're on a 2, but the 2 did not trade lower than the 1, so you should be in cash. Tesla, you're on a 1 for now, so if you get a 2 trading higher than a 1, you could go long. We are not out of the woods looking at Tesla, since there's still the 50 moving average and the 30 moving average higher than the price. And stop inverse for now are higher than the price too. So Tesla is not looking great. It's in between. It's in between for now. you should be in cash and see what happens. Here you get an 8, so maybe the downtrend is over. It would be nice if you get a 9 and then go higher, but I'm not sure we will get it. The dollar is moving up again, is bullish again. Stop inverse will get hit soon. You are higher than all the moving averages. That is positive. It's looking good for the dollar. Euro is the opposite. Euro is looking bad. You should be short. I think Euro, you're below the moving averages and you have the 2 trading lower than a 1. British pound, you're on a 1. You're lower than the moving average. That's bearish. And if you get a 2 trading lower than a 1, you should be shorting it. Swiss franc, you're on a 4. In a short position, you're below the moving average. That's bearish. Moving averages are very important. So never neglect what the moving averages are telling you. Gold, you're higher than the moving average. That's positive. So that's the first thing you should look at. And you had a 9 here. So expect a 1 to 4 candle correction, then higher. Then maybe higher, maybe. You have to see what happens. Maybe you get a downtrend, but or an uptrend. You have to see what will happen once the next 2 candles are over, once the correction is over. Oil, you're below the moving average. That's negative, but you had a 6. You could expect a 9 in the best case, and then I would expect it to go lower. So, I mean, it looks like the uptrend is fading on oil. But for now, it's positive according to TD sequential, but it's negative according to the moving average since you are below the moving averages. I would give more importance to the moving average than TD sequential. Okay, that was all for today. Thanks for watching and see you next time.